Aloha, I'm Carl Bonham, Executive Director at UHERO. I'm here with our last UHERO Focus video for the year. This is our fourth quarter forecast video, and the big takeaway is that really our outlook for the Hawaii economy hasn't changed that much, but we've got a lot more uncertainty about the prospects for the U.S. economy as we face new policies on federal tax policy, on tariffs, on immigration policy, and the possibility of deportations. The big picture globally is improving. We're seeing inflation come down around the world. We're certainly seeing inflation come down in the U.S. This is the Federal Reserve's preferred inflation measure. It's the personal consumption expenditures inflation measure. And as you can see out here at the end, we're basically at 2%. That's their target. So we fully expect that when the Fed meets next week, they'll cut interest rates again. Now going forward, that is another question. We get much more uncertainty, as I mentioned, as the tax policy comes into play and then tariffs and so on. And what will that do to inflation and to interest rates? Those policy changes will also affect Hawaii's tourism. And in particular, we actually think that U.S. economic growth, the gold line here shows our forecast for U.S. real GDP growth with the Trump policies in place, and the light blue line shows what we think would have happened without these new policies. And so you can see in 2025, we think the U.S. economy will actually grow a little bit faster. We'll get a little bit of boost from tax cuts and tax extensions, but then as you go into 26 and 27, we're expecting a little bit weaker growth associated with tariffs and associated with fewer workers from migration policy. And then down the road, we also are expecting higher inflation. Not dramatically higher, but most of the Trump policy agenda is inflationary. And when you've got a U.S. economy that's running at full employment and you have labor market shortages and the unemployment rate that's been at 4% for multiple years, anything that boosts the economic growth on the demand side and then contracts it on the supply side is going to lead to some inflation. So all of that will have an important role to influencing tourism. The near-term growth in the U.S. economy in 2025, we think it could actually lead to a boost in U.S. visitors. The light blue line here is U.S. visitors. These are indexed to 100 pre-pandemic, and so you can see some improvement in U.S. visitor counts after they weakened post-wildfires. That's the positive effects on tourism. Longer term, we really are looking at sort of flat U.S. visitor arrivals, but then the international markets will be affected by the tariffs that will impact those very trade-dependent economies. Higher interest rates in the U.S. all point towards a stronger dollar, and that stronger dollar will weigh on international visitor spending. So you can see our forecast for Japanese arrivals is very, very flat for the next several years before recovery sort of resumes. And the same thing goes for the other international visitors. So the good news is that after experiencing a full year of pretty weak tourism and a decline in visitor spending of about $1 billion, the construction industry is completely taking up the slack. So the construction industry has added well over $1 billion over the last 2 years in extra spend, and construction job counts are now at a record. That's what this slide is showing. These are quarterly construction job counts, and we haven't been near this level of jobs for almost 17 years, all the way back in 2007. Now, one way of looking at how important this construction cycle has been to the state economy, about half of all the jobs created in 2024 were actually construction jobs. Over the next several years, that construction cycle will peak and gradually wane. And then the policies that we're talking about, the federal policy around tariffs and taxation and possibly migration policy changes and deregulation, all of those will begin to act on the Hawaii economy and the Hawaii labor market, combined with demographics and all the other things that are going on to act to slow the labor force in Hawaii, slow labor force growth and slow job growth. So we're really looking at job growth slowing from a little bit less than 1% this year to about 0.5% in the out years. And I've mentioned inflation several times. Inflation is a drag in the sense that it's sort of pulling down your buying power, right? And you can see from this chart the surge in inflation we had back in 2022. Well, we had another one in 2024, and then we think we'll have a little small one in 26, 27 associated with tariffs and other federal policies. But the good news is we think that nominal income growth will outstrip that. That's the blue bar. So we'll see positive real income growth in the 1.5 to 1.75% range for the next several years, even as inflation gets back up to 3%. Now, the broad overview is just uncertainty, right? The Hawaii economy will continue to grow, will grow more slowly in coming years as we get past some of this building cycle and the rebuilding on Maui. As we get into 2025, we'll start to have a little more certainty about policies as they start to be enacted. And we'll be back with an update in the new year. So I wish you all happy holidays and a really prosperous and healthy 2025. Aloha.